Feeling like a shark in a shrimp tank. Big fish, small pond in the shrimp tank.
Hey everyone, I'm Mark Scribner, your host, here with my co-host John Warner from Link Ventures. This particular series is being sponsored by Link Ventures. I want to remind all our listeners that you can follow this podcast at Shrimp Tank Podcast /Boston. You can get us anywhere that you grab your podcast. It is iHeart, Google Stitch, SoundCloud, as well as our YouTube channel where we have some really cool content. So with that said, John, it's great to see you. I know we have an awesome guest today, but first for our listeners, can you maybe just give us a 2-second blurb on why Link is such a cool company?
Sure, we back great entrepreneurs and help them scale, and we're on a mission to back a bunch.
That's great. Now, so we have this gentleman that we're going to bring on in just a minute, Patrick Boyaggi from Own Up. I know that you have some experience working with him. He has some affiliation with Link Ventures, but why is Patrick a cool guest, and why should our listeners want to stay and listen to him?
Sure, Patrick is awesome. He was a mortgage insider. For 5 years, he led a team that closed over $11 billion in residential mortgages. He really knows the industry. And one day he just woke up kind of like a Jerry Maguire. He saw a problem in the industry. He said there was a misalignment of incentives, that there was asymmetry of information where the consumer was on the losing end. And one day he just walked out in 2016 and said, there's a better way and I'm going to do it. And he founded a startup to address this. And he centers it around helping people. And it blends technology and the human connection. And a mortgage innovator was born. Who would think that that space would produce someone like that? And Patrick is helping people. This is often the biggest transaction of their lives. He's empowering them at a time when digital natives are coming up, doing all their things online. They're ready to do things like this online. He asked for 0 social security numbers, no credit, hard credit, and he's thriving. His company doubled in size in 2020. He went from 50 to 100 employees, and they 4x revenue. And what OwnUp is, it's an online mortgage service that matches borrowers with optimal leaders based on a criteria determined through a proprietary online pre-qualification process. The team is going after the massive US mortgage industry. And Mark, to give you a sense of it, that's bigger than 1.8 trillion. It's a huge market. And Patrick's team has worked with thousands of customers, and they are saving around $30K over the lifetime of their loans. And Patrick is digitally disrupting a huge existing market where people traditionally did it offline. And he's right at the time where people are becoming more comfortable doing it online. And he's scooping up customers left and right. And basically, the reason I love Patrick, and the reason I think I'm so excited for you to meet him and for our listeners to meet him, is he's making getting a home loan cheaper, faster, and better. And as you and I talk, these are interesting times with interest rates and the pandemic decoupling where you live and where you work. Now you can live everywhere. I think families are buying homes earlier, given the low interest rate. And these guys are right at an interesting inflection point, and they're crushing it. And I think they're going to make Boston famous, growing up here, starting here. And they have a real national reach, and they're going like gangbusters. But yeah, Mark, why are you excited about this? I know we've talked about what big tech is doing with their headquarters and so on.
Well, I mean, I just think, like you said, the whole experience is a very stressful experience, and there's a lot of analogies for different industries that cars, but empowering the consumer to have a level playing field where they don't feel like they're in a blind spot, and they're empowering themselves, and to disrupt an industry that nobody knows really the inner workings by pulling back the curtains. Putting your transaction out there and just thinking you're getting a good deal, but you have no clue. And I'm excited. It's a Boston-based company. I know it's a national firm now, but I'm also excited to hear in COVID. I mean, for a company to blow up and do 2 times and grow so rapidly in an environment like this, it's clearly there's something great going on. And I think it's going to help our listeners, learn about if they want to be an entrepreneur, but he's a good guy, and I think he's going to have some great, valuable lessons. And I'm excited to see, what they do at Own Up. So with that said, I'm going to
just made me think of this. How many industries does the customer have something in common with one another? sleepless nights. Like how many people had a sleepless night before they committed? And someone like Patrick recognizes that and is disrupting it. So I'm really excited about this guy.
Yeah, me too. So we're going to bring him on right now. So welcome to the show, Patrick.
Well, thanks for having me, Mark.
Hey, Patrick, low interest rates, what comes to mind and how's that impacting your business?
Well, it's good to see you, John. Thanks for having me. When I think of low interest rates, I think about the opportunity for people to refinance their mortgage. And when I think about the opportunity for people to refinance their mortgage, I think of it as a personal stimulus. There's been a lot of conversations in the news, and rightly so, given the global pandemic, about stimulus payments and supporting people through, these challenging times. But if you're a homeowner and you have the chance to reduce your mortgage interest rate, it's likely the basic expense that you have. And so when you complete that transaction and you start lowering your monthly payments, that's really creating opportunities. Beyond just the savings, it's what can that money go towards? For a young family, that can be things like diapers and daycare, and for people with children in college, that can be extra money to be able to pay for that. So I get excited about the opportunity to help people to lower their mortgage payments, and specifically to make sure that they're finding or optimizing that transaction, to make sure that just lowering your payments is one thing, but making sure you're not overpaying even when you do refinance is really important. Really finding that best deal, finding the biggest savings that you can get. And we take a lot of pride in being able to help people do that.
Patrick, for most people, the going through the mortgage process is akin to getting a root canal, based on my experience. And there's so much information out there with the usual suspects that have huge advertising marketing budgets per se. How do you compete with that space? And then how do you actually get a particular interested person kind of prepared for kind of going through that whole process and making it the most successful, I guess, at the end of the day? Because it's like the wild, wild west out there with refinancing and mortgages. So maybe you could talk a little bit about that.
For sure. So our main focus is at the beginning phase of the home financing experience. So specifically, we are the best way to search for and secure a mortgage. And so, Mark, when you describe the root canal, that analogy is apt, and it's because from start to finish, there's just tons of hurdles and tons of challenges. And so we've decided to tackle the biggest problem that we see in the industry, which is information asymmetry. Okay. If you think about, financial services, there is this inherent misalignment of incentives. And that is most obvious in the mortgage transaction. What I mean by that is when a lender charges a consumer a higher interest rate or charges them more closing costs, they make more money. And think about that for a second, right? Like the financial institution does better when the consumer does worse. Okay. And so the way the industry has been able to take advantage of that is through this notion of information asymmetry. Lenders have access to all of the information and consumers have access to very little information. And therefore, they're able to use that as leverage. They're able to overcharge their customers without the customer oftentimes not even knowing it, okay? And I'm not talking about charging a customer 10% interest rate versus 2%. The internet has created enough transparency in this industry that's not happening. But what I am talking about is, anywhere from 0.25% to a full 1%. And while that doesn't seem like a whole lot when you describe it like 0.25%, the fact of the matter is, if depending on the loan size, 0.25% can be tens of thousands of dollars for a consumer over the life of their loan. Mm-hmm. And so what we do is we are a purveyor of information. We are we empower consumers. And the way we do this is with customized data and personalized advice. We'll collect your information in the least invasive manner. Things like we don't collect your social security number, we don't do a hard credit inquiry. And once you create that profile, we're going to tell you exactly which lenders are best suited for you, exactly what products are right, and we're going to tell you the exact interest rates and closing costs you should expect to pay for your very specific information. And with that information, you are empowered in ways that you never have been before. But it's not dissimilar to other industries. We see access to information and the synthesis of a lot of information into an easy to understand fashion in all walks of life, but we haven't seen it in the mortgage space. And that's what we're really bringing to consumers. Now, after you have that information, you can choose to do with it what you want. You could use one of the lenders inside of our marketplace, and there's value to that because we've pre-negotiated terms and we will stay with you throughout the entirety of the experience. We've vetted all the lenders, all these sort of benefits to you. But even if you didn't want to do that, there is no reason why any consumer in America that's financing their home, whether they're buying a home or refinancing, shouldn't leverage Own Up to gain that knowledge and to empower themselves in ways that they just haven't been able to date.
Patrick, how much can a consumer save on a mortgage using Own Up?
Yeah, well, let me position it this way, John, so that it doesn't sound like an infomercial for Own Up, at least entirely. We recently conducted a study on using publicly available data, so data from every lender in the United States that's collected through the Home Mortgage Disclosure Act. And we analyzed the data to present information that was really quite disturbing, candidly. And what the information showed is that rates between the top 20 lenders of VA loans, so we very specifically focused on borrowers who are either veterans or active duty military. And just amongst the top 20 lenders, John, the rates varied by more than 1%.
Right.
So the exact same scenario, apples to apples, okay? All the same criteria. And if you went with one lender, you could end up paying a full 1% more than if you went with another lender. And this study was picked up by NPR. They did a really great story on it. You can find it on their digital platforms. There was also a sort of radio story behind it as well. So, this is just one specific demographic, and this is using publicly available data to suggest that every single consumer can benefit from searching and shopping for a mortgage. The reason they don't do it, John, is because it's really hard. It takes a lot of time, and the lenders that are out there are motivated to prevent you from shopping, because if you shop, they can be exposed if they are overcharging you. So what does Own Up do? Well, we give you that opportunity. You get to create a profile in less than 5 minutes. There's no obligation. You're going to get access to not only offers inside of our marketplace, but we're going to also show you data from more than 16,000 lenders. So you can not only understand, hey, am I getting a good deal from the lenders inside of Own Up's marketplace, but how does that compare to the national average? How does that compare to everything? It's about radical transparency for a consumer. So they do what's in their best interest, not what's in the lender's best interest or our best interest. And so, our average customer saves more than $27,000 over the life of their loan. That's not an insignificant amount of money. And we're really proud of our ability to help people do that.
Patrick, I don't think I do it anymore, but I had my mortgage license, and I read, one of the things that was a kind of a guilty practice was this practice called redlining, where, mortgages were different from geographical codes. It could be inner cities had a different rate and stuff, but it almost seems like this industry, has their hand in a cookie jar for all intent and purposes, where, the consumer is not empowered to basically know, that there are different rates. And sometimes it could just be a course of a couple of hours of corporations changing their policy and, moving the needle with interest rates from a business plan or process in their portfolio. But have you seen, any pushback from the industry because you're able to give the customer transparency?
Yeah, Mark, it's a really interesting topic. So you'd think that you'd never be able to build a business model like this, right? Like, how could you ever get lenders to participate on a platform like this, where they basically are willing to not only present a customized loan offer to individuals, but to do so right next to their competitors in theory. And, so it, I think one of the things for us really is the fact that in a prior life, I worked in the mortgage industry. I ran the residential lending business for a bank just outside of Boston. And it was really sort of the fact that we were insiders and the fact that we had connections that allowed for us to sort of get this off the ground. But the way we were able to compel lenders to participate was really around this idea that they need to meet consumers where consumers want to be met. And there are lenders that are going to have to adapt to the changing consumer behavior. And what we see, Mark, is that consumers have become accustomed to not only wanting, but demanding access to information, to optionality, to choice, to be able to make decisions that are in their best interest. And so if the future customer in the mortgage industry is somebody that's grown up on the internet, they're sort of this digital native that's become accustomed to living their life in this fashion and to making every decision in this way, well, lenders are going to either have to adapt or they're going to die. And so, the lenders on our platform said, you know what, we want to be at the forefront of this change. We want to join a platform that is going to meet the needs of today's consumers. And we can't do that. As an institution, a single lender that has one set of products to offer, you just can't present the same value proposition we could. So you're going to have to partner with somebody in order to make it happen. And so getting that first lender was a little bit hard, but again, we were sort of insiders, we had connections, we got people to do it. And now that the demand is so high for our service, well, there's a line of lenders out the door. And so, that's sort of the genesis of our story and how we were able to get this off the ground. There was a lot of heartache along the way. It's certainly, like most things in entrepreneurship, it's certainly not for the weary, but we feel like we're in a really great place now where we create incredible value for consumers, but we create incredible value for our lenders as well. We're bringing them or giving them access to customers they otherwise weren't going to get on their own. And, it's the old cliche, but really it's a win-win-win. The lender wins, the consumer wins, and, we win for playing our role in managing this marketplace.
So Patrick, I know the last year you've doubled in size in terms of headcount, and I think close to 4x your revenue. How scalable is this business, and how do you get more market share?
Well, on the market share front, this is a highly fragmented industry, John. There are 26,000 lenders all across the country. And no single lender has really more than, call it 7% market share. So if you're to attack this as a single lender, whether it be a bank or a mortgage company or a credit union, it's going to be really challenging to ever even get to the double digits. But just remember, we're not a lender. Very, very clearly, that is not our business model. We have created a very innovative marketplace. And as I stated earlier, every single consumer in America can benefit from the customized data and the personalized advice we're able to offer them. And so when you position it like that, we really feel that we are well positioned to be a winner take all. That doesn't mean that every single person that's financing their home will necessarily work with one of the lenders inside of our marketplace, but every lender that's starting their financing journey should begin it at Own Up, because there's really no downside to it whatsoever. And then if we continue to bring really great lenders, we continue to negotiate on behalf of our customers, and the marketplace continues to drive down cost, and the competition continues to drive down rates, then more and more of our customers will choose to work with the lenders on our platform. Now, in terms of scalability, we believe very firmly in the notion of technology plus humans creates better outcomes for not only consumers, but also for businesses as well. Companies that choose to use technology alone are unable to connect on a human level with people, particularly in transactions that are this important, like financing your home. And companies that rely solely on humans are limited in their ability to scale, right? They just need to hire more humans in order to do that. So, we have built proprietary technology that supports a innovative business. And we have created an incredible amount of operational leverage, to the point that the people on our team that help our customers, so these are licensed mortgage experts, they'll work with 10x the number of people in a month that a traditional mortgage loan originator would. And that just gives you an indication of how much leverage we create through technology and the capacity to continue to scale our business.
On the scalability, what states are you in now, and what states do you want to go into?
Yeah, it's a great question. So we founded our company in Massachusetts. So we're in Massachusetts. We're in New England. We've begun to expand geographically sort of down the eastern seaboard. So we're in states like Pennsylvania, Florida, Georgia, and we've expanded to Texas, Colorado. But this year we'll expand to another 15 states, John, including California, which will be our first state on the West Coast and the largest real estate market in the country. And in the states, once we complete the licensing process for all of the states, will account for about 75% of all the loan volume originated in the United States. So we're not going to be in all 50 right away, but we'll cover the vast majority of the population.
Patrick, are there, I guess there's really two questions. Are there other non-mortgage industries that are similar to, top of mind, like something like Carfax or something where they're taking a data set and they're comparing it against the national average and empowering the consumer. So are there, I guess my first question is, are there companies that, other industries that are similar to empowering the consumer the way that you're doing it? And then my other question would be, is this something that has other verticals? Like I could see, using that car thing again, the same thing like financing a car, or anything that has a data set from a finance perspective where you're empowering the consumer back. Do you see other add-ons to Own Up outside of mortgages?
Yeah, well, there are a number of analogous companies. So one that comes to mind is TrueCar. So TrueCar is something that actually served as inspiration for me in starting Own Up, candidly, is when I bought my car. I mean, TrueCar will allow you to sort of customize the car that you want, and they'll provide you with information about what other people in your area have paid for that exact make and model. And so now you're empowered with that information, right? Like you can either take that on your own and go search for the lender, or for the car dealers that have that and use that to negotiate, or you could get access to their their dealer network where they've sort of pre-negotiated terms. And that way you don't have to go to that lender and do that really awkward situation where you look at the car and then, you sit at the desk and the guy says, this is what I can offer you. And you say, I don't want that. And then he goes in the back room, says, I have to talk to this guy. And he's probably getting a cup of coffee and not really doing anything. And then he comes back with a lower, price, that whole sort of thing. So that's one. I think, kayak is another one that people have compared us to. This idea that, look, I want to fly. There's a lot of different options. There's a lot of different variables going on here. Sort of how do I optimize for that? I think what's really unique about our model in a lot of ways is, I would say there's sort of like three big things. One is we use data and technology to make the collection of your information sort of non-invasive. So I alluded to it earlier, no social security, no hard credit check. And the second thing I would say is that we give you access to a human. And this human is a licensed mortgage expert. And you can talk to them free of charge and there's sort of no obligation. And what they're going to do is to help you understand each of our lenders' offerings, how to compare different offers, how to understand what the other 16,000 lenders are offering, just so you can be certain you're getting a fair deal. And then the third thing is that in our marketplace, we only get paid by the lender when you close. So our incentive is to get you the best deal, not just to sort of sell your data. So we need to get the highest conversion. And in order to get the highest conversion, we go and sort of pre-negotiate terms on your behalf. As we cut out the lender salesperson, we take you direct to the lender, they save, and we require our lenders to give a portion of that back to you. And so when you think about a comparison to a company like Kayak, the real difference is like, I could go on Kayak, figure out exactly what my needs are, and just pick. Well, in a mortgage, it's far more complex. There's more variables in there. So it's not like flying from Boston to Houston and just picking the, American or JetBlue. There's a lot more complexity. So we really, empower you with that human, to really help you navigate this process, serve as your sort of co-pilot in this experience. And then,
oh yeah, you asked follow-up.
Yeah, just on Mark's follow-up question, which is, this notion of extending to verticals. For us, Mark, our real focus is on the mortgage transaction and creating value in that transaction. And so that transaction involves a variety of different elements. So if you come to us at the early stage of the buyer journey, we have the ability to pair you with real estate agents that are perfectly suited for your needs. So we have a partnership with the largest real estate brokerage, and they comprise of a number of different brands. So we're going to take your profile and find you an agent that's a specific fit for your needs. That's one example. We can help you to secure title insurance, right? And make sure that you're not overpaying there and that you're getting a fair deal there. We can help you get homeowners insurance. We think about all the stuff that could happen in home. So when we think about, our expansion, it's really on this unyielding focus on doing what's in the best interest of consumers, bringing transparency to this process, and helping them to achieve better financial outcomes than they could on their own. Whether down the line we enter into other financial products, perhaps, but I think there's a big enough problem here that we want to tackle the mortgage issue first and foremost.
How many, how big is the market space? I know both John and I probably have a good idea in our respective jobs, but how big is the opportunity, do you think, for you?
Well, it's truly massive. I mean, to give you perspective, there's nearly $4 trillion worth of home loans that will be originated this year. So, there's intense demand, and, with all of these different opportunities, I think there's a real potential for our business to become something really big and successful. But at the end of the day, this is a mission-driven business, Mark. It's like I, as I stated earlier, sort of worked for a lender, was compensated very well. My co-founder, Mike, also worked for that same lender. My third or other co-founder, Brent, was a software engineer. We were very good position in our lives, but we just looked at the industry and said, it's broken, right? There's this fundamental misalignment of incentives, and we wanted to level the playing field for consumers. And so our main objective ultimately is on really being a beacon of light for consumers, being that advocate for consumers and helping everyday Americans save on what's likely the biggest financial transaction of their lives. And our belief fundamentally is that if we are great at that and we continue to create a passionate group of followers and users and customers like we have, that there's really no limit to what we can become as an organization. But as long as we maintain that maniacal focus on the customer first and doing what's right for them and aligning incentives with them, then we feel like the rest will follow.
Patrick, when you and Mike left the industry, I know the industry lenders average age is like 60. I know there's like 26,000 players. You probably brought the average down when you left. There was a feeling in the force that two people left. I got a question on this great company you're leading. How are you using technology? And I have two questions on that. Mobile, is it possible that a digital brokerage company like yourself, I know you have a human dimension, but could be 100% mobile? What are you finding in terms of your customers in terms of using mobile? And then chatbots have we've heard a lot about them. Are you using them? Do you see that helping you scale? So just curious, as you think about growing, how those two things factor, mobility and chatbots.
Yeah. So what I would say is, on the mobile front, doing a complete mortgage transaction from your home or from your phone, is more challenging than, let's say, less complicated financial transactions like
Buying a stock,
a loan or something like that, right? Buying a stock. So there are still a lot of documentation requirements. There's a lot of constituents, whether it be the real estate agent, the lender, the closing, the title company closing your loan. But to the extent that you consider things like being able to take pictures of documents and sort of email them or communicate through your phone, there is a way to complete this transaction primarily from your phone. I think that long-term, John, those barriers will continue to come down as technology evolves, but also as the industry evolves. The industry is going to have to sort of make headway there in order for that to be a possibility. And what I mean by that is, 3/4 of all the loans originated in the United States are sold in the secondary market. And Fannie and Freddie, the government-sponsored enterprises, play a big role in dictating the sort of terms of those sales and things like that. So, once they allow for lenders to be able to leverage more of this technology, you'll start to see more of it come online. But it does beg the question, are consumers ready? And so, I think you'll hear a lot of people. In fact, when we started, John, we did a lot of consumer research, and everybody said, I love what you're doing. I want to do it fully digital. I don't want to talk to anybody. Just let me do it all from my phone. And the fact of the matter is, when push came to shove and the transaction started, most of these people were scared and vulnerable because, they don't do this transaction with a great deal of frequency. It could be the first time they're ever doing it. And so the human component, being empathetic, being able to listen, understanding their needs, customizing a solution for them becomes an important role. Not for everybody, but for the majority of people, at least to date. So that sort of transitions to your question about chatbots. Well, it's important to know that people like and the security of knowing that a human is there. And at certain points in this transaction, they want the human available to them. At certain points, they don't want to talk to a human at all, and they want to do, all the sort of digital solutions for it. So the chatbot, or non-phone communications are all just means of providing what the consumer wants through a different format, right? And so if somebody can get their question resolved through a chatbot, and it's a simple question, and that's more efficient for the consumer and creates more value, then we should be doing that, right? And there's an ancillary benefit to us, which reduction of cost and resources and things like that. And so, we have chat functionality. I think we'll see more of that come online this year. We're making, substantial investments in productizing our service even more this year to meet customers the way they want, where they want, when they want. And that's just one means by which you can do it.
Great. Mark, should I jump in with one other question, or do you want to go?
Yeah, absolutely. Go ahead, John.
Yeah. So I'm, with interest rates so low and demand high, this is sort of a unique moment. And I figure this moment may not live beyond this time, and there may be some changes in those two variables. What will endure with OwnUp's offering? And I'm also curious if the unbundling of where people work and where people live, given that work from home is happening, do you think that's going to create some opportunities for you guys? The labor market and the real estate market are sort of becoming disentangled. So curious what will endure after the pandemic and these unique times, and what do you think of just some of the changes in habits? And we also have climate change, like floods and fires. Do you think people are going to start making decisions on how they use your product and where they live based on the environment? So there's like 8 questions there.
Hey,
I was smiling.
I'll jump in as it could be short sales and reverse mortgages, just half jokingly.
Yeah, I was smiling, John, because there's a lot to unbundle there. So I'll do my best and interject if you have follow-up questions. Look, this pandemic has changed the way we think about our living situation more than any event in certainly my lifetime and most people's lifetime. We have never been more intimately aware of our living situations than we have since the start of this pandemic. We've all sort of been forced to stay into our homes. In many cases, our homes have become our gyms. They've become our offices. They've become daycare. They've become schools. In some cases, all of the above, which is the case for me. So what's that mean? Well, I think people, John, have been forced to really evaluate their living situation in ways that they hadn't thought about before. So that's from the very obvious things like space and, do I have the capacity to do the things that I need to do in this sort of new world? Some of it is rethinking, what it means to work remotely, and do I want to be, commuting into work, and what does that really sort of mean to me? For some people,
there's a permanency to it, right? Some of the companies out there have announced that it's a permanent. So not to put words in your mouth, but it sounds like, and I agree with you to a certain degree, that this is the landscape's changed for the most part forever.
Exactly. And so, if you live in an urban setting, you might not want to be, living on top of people. Instead, you're thinking about moving to the suburbs, things like that. Now, with regards to sort of the macro environment, we have built a business, John, that sustains any market conditions. Okay. When you put the consumer's interest ahead of everything else, and you break down barriers for consumers that yield a better experience and yield better financial outcomes, that will endure regardless of the interest rate environment. If you look back at the most successful companies, specifically technology companies in the internet era, they've done one thing consistently, and that's save people money. And we've built a business that saves people money in what's likely the biggest and most important financial transaction of their life. So whether rates are low or they're high, you can make an argument that our service is less valuable now than it is in a higher interest rate environment. When you're getting an interest rate, a 30-year fixed rate mortgage at 2.5%, the difference between 2.5 and 2.75 is still like, it's like free money,
That's right. Interest rates go up like in the 70s where, you're basically like credit card interest rates for your mortgage. So as we're in a completely, historic low interest rate environment, potentially for you, as the interest rates start to creep up, everybody's talking about inflation down the line, that could be a big uptick for your business. Is that correct?
Absolutely. It becomes even more important to make sure you're getting a fair deal and that you're not overpaying. And more importantly, every single consumer should be empowered with data and an understanding of their specific situation and how to optimize a solution for that. And that's what we do. And so we started this in a rising rate environment and saw very widespread adoption. We've benefited from the low rate environment, although, according to data from the Mortgage Bankers Association, we're outgrowing the industry by more than 4x. So low rates aren't the cause for our growth. The cause for our growth is this maniacal, unyielding focus on the consumer and making sure that they have a better experience by leveraging OwnUp than they would if they did it on their own.
People don't trust the I hate to say it, but they don't trust the industry. But with that being said, just for purposes of time, first, I'd just like to remind everybody where you can follow us, Google, Stitch, SoundCloud, anywhere you can get your podcasts. We're nationally syndicated through iHeart. This particular show is sponsored by Link Ventures, which is based out of Cambridge. We have John Warner here as a co-host, as a managing director. Patrick, for our listeners, we're going to put your information below this show, but what's the best way for anyone that wants to learn more about OwnUp, or maybe a budding entrepreneur that wants to learn how to start a dynamic company like yours? What's the best way to get a hold of you?
Well, for anybody that is interested in sort of using our service, they can go to ownup.com. They can start the experience there. For anybody that is interested in sort of talking to me, to the extent that I can be helpful, you can reach out to us through, on the site, there's opportunities to contact us by phone or, through email. And I'm sure that will get directed to me, and, happy to connect and be helpful to other entrepreneurs that are, starting a journey like the one that I'm in the midst of. I think that's sort of the best way to do it.
Well, hey,
actually, last question. When do you predict you'll be in all 50 states?
Yeah.
That's a good question. I think, we like to take it one day at a time. If we think about it 1 year at a time, this is going to be a big jump for us, John, in terms of, being in, an additional 15 markets or so. So I would say, the remaining states will come sometime, 2022 or so. But, one of the things that I would say that is important is we are, continuing to build tooling and resources that will be available to all of our customers or any person that comes to OwnUp's site, regardless of where they are located, John. So, right now we focused our solution for people that have a need in very specific areas, but, we're spending a lot of our investments on products and tools that will be available for all consumers, regardless of if they can get connected with a lender on our platform. We'll be able to create value for them. So I think that's an important part of our mission.
Great. Well, I'm glad our listeners can meet you, Patrick. You're tenacious. I've seen a lot of founders, a lot of startup CEOs, and you have all the qualities, and you're going to go the distance, and you're providing a great service for this country, this economy, and home buying is not going to be the same, once you hit all the milestones you want to hit.
Yeah.
Well, that's very, very kind of you to say, John, and I appreciate it. We're working hard, and my role in this thing, candidly, is very small relative to all the rest of our employees. We've built an incredible team of people that are committed to our mission and really believe that we're having a profound impact on consumers, and they're the cause for our success. I play a small role in it and get to do fun things like this, like come on a podcast with you and Mark.
Thanks again, Patrick. We'll look forward to the updates, and we wish you continued success. And thanks for doing a great job for the consumers.
It's my pleasure. Thanks for having me, Mark. Appreciate it.
I've been feeling like a shark in a shrimp tank. Big fish, small pond.